Good afternoon, trader friends. Hello, friends at FX Street. I'm Jennifer. I'm back with session number 7. This is our final lesson in the MACD webinar series. So let's jump right into it. We're going to have a little bit of a discussion about using these strategies with your other strategies. And also, I'm going to give you the granddaddy review of the MACD and everything that it can do and everything that I taught you in this series. So let me jump over to my slideshow right now. What I meant to say is now we'll get over to my slideshow. All right, here we are. Okay, this is the agenda for tonight's session. This is session number 7. This is our final session on the MACD trading series. Questions or want to know more, you can always reach me at combotraders@gmail.com, and you can find my website, simplycombo. It's www.simplycombo.com. So I'll give you those again at the end, but tonight what we're going to talk about is the hopper assisting your other strategies, basically using the MACD together with any other strategy that you trade. All trading comes down to just a few of the same tasks: opening a trade, closing a trade, choose a stop loss, choose a profit target, apply or change the stop loss and profit target orders, trading with the trend, trading against the trend. These are all the kind of things that all traders do no matter what strategies you use. And so tonight I'm going to talk to you about applying the MACD to any of your other trading strategies. Because all trading has certain things in common. The market only really does two things: it trends and it ranges. The market progresses price in one direction in a trend. Every trend has a phase of progression to higher highs or lower lows. And every trend has a retracement phase where price pulls back off the trend kind of for a breather. And then there are ranges, and there are lots of different kinds of ranges. A sideways lamb market happens when the market keeps a very tight, sideways, quiet, sleepy range. When we can also have very large swinging patterns that can encompass hundreds of pips, and yet the market is not making any real progress in the end. It's still just a range. All varieties of ranges in between the extremes have one thing in common, and that is no progress in one direction. So that's basically the difference between a trend and a range, and those are the only two things that the market can do. So every trader has to decide where to open the trade, how long to stay in the trade, where to put the stop loss, how much profit they want to take, and maybe how many trades you want to have opened. And it just so happens that the MACD can help you address every one of those items. And it's also true that the button program automates every one of those MACD tricks, which is pretty cool. And that's the whole purpose I'm spending time with you tonight. So let me just start with talking about 3 elements of trade planning. No matter who you are or what you trade, whether you know you're doing it or not, there are 3 elements of trade planning for all trading. Here they are. Number 1, identify where you want to participate with the market. Where do you want to be trading? Number 2, identify a target. Where is price headed? There's always a target. The market is never random, and neither should we be. And number 3 is identify your point of entry. This is always the hard part, but fortunately for us, the MACD makes it easier. From here, we can assess the existing condition of risk and figure out where the stop loss needs to go, but it all starts with those 3 elements of trade planning. You can try adding a hopper strategy to all the other setups and strategies that you might use. The market is doing the same things whether you're trading in the Ichimoku clouds or labeling Elliott waves. It doesn't matter to the market how you trade it. The market moves with ebb and flow through periods of trending and periods of ranging. Adding the hopper or other MACD strategies to your setups gives you the added benefit of mathematical signals for timing, direction, and momentum, and even those times when you need the passage of time before the market's ready to do anything. So what strategy wouldn't be improved with signals about momentum and direction, and when your best move is to just wait it out? So there's a lot of people that use divergence strategies. A lot of trading strategies out there use divergence to set up trades when the market's gone too far, or when a trend is maybe losing steam, or when it's just time for the market to take on a new position or a new pattern. Divergence can be seen when the top line of price is still climbing, but the top line of an indicator is actually descending. And so there's a disagreement between price and the indicator. And usually the indicator is going to be right. Divergence usually involves an indicator calling for a turnaround while price is still pushing in its direction. So here's an example where we have price pushing for higher highs while the MACD is starting to make lower highs. Price is saying, oh no, this trend is still on, we're still going, and the MACD is less impressed. That's called divergence. It doesn't tell us anything about timing, but it is part of a lot of trading strategies, and for good reason. I'll talk more about that in a minute, but here's another example where we had a downtrending market, and the bears were in control of this market, pushing for lower lows, and lower lows, and yet the MACD is making higher lows, right, the whole time. So the MACD is saying, I'm not so sure that I think that you know that you're not going to lose it here, but you know, there's a disagreement between price and the indicator. And as cool as that is, and as useful as divergence can be for getting you ready for a change of direction, divergence by itself tells us nothing about timing for that move in the market. So here's another one that was a downtrending market where the MACD started making higher highs. I see that as a disagreement between price and the indicator. And remember, the indicator is usually right, but one of the two is going to be wrong. Sometimes it's the indicator, sometimes it's price, but eventually one of them is going to be right. And when it's the indicator, we're going to see a reversal happen. Now, in this instance, we see divergence, which tells us that the indicator is calling for a slowing down in this downtrend. Tells us nothing about timing until we get the hopper. And in that moment, we get a point in time that gives us timing for that particular move in the market, and also gives us a point in time where we can expect some momentum to be building out in the opposite direction for that reversal. Now, I realize there were other hoppers that happened in the midst of this, but you also notice that they immediately failed. So the MACD immediately rolls back over zero, back in the downtrending position as the downtrend resumed. And as long as the MACD line is below zero, MACD is right there for you saying, you know, I'm thinking that we've got a reversal coming, but it's not yet. It's not yet. It's not yet. And then all of a sudden we get a hopper and we have momentum pushing behind it, and we have an actual significant reversal in price action. So it is putting the hopper together with that divergence strategy. Now, divergence strategies are very popular, as they should be, because the pullbacks are the surest moves in the market. It's absolutely certain that they will happen. Whether or not the trend will continue, we do not know. But what we do know is that eventually we're going to get a pullback or a retracement. That's an absolute. But timing is the tricky part. And there's a little problem with divergence, and that is that it tells you nothing about timing. And there are a ton of divergence strategies out there, and maybe you trade one. So fortunately for you and for me, timing is the MACD's middle name. And the thing that divergence is weak in, the MACD happens to be very strong in. All right, so the MACD is applicable in addition to any trading strategies. Most trading strategies do two things for us. They help us find a counter trend opportunity, maybe using divergence or something else. And number two, they find points of entry, you know, for a new move in the market shows commitment to a direction. The MACD finds timing with anticipation of momentum for trend continuation trades as well as counter trend trades. So if you trade, the MACD will confirm your timing or help keep you out until the timing is better. Another thing that the MACD is very good at, as we've learned in this series, is letting you know that the market sometimes just needs the passage of time before it's ready to make a move again. And that can be very useful information when it comes to trading any strategy. So add a hopper strategy to your trade setups and see how much more accurate your entries become. Better yet, use one of the buttons to do it for you. Once you know you have a setup that you want to take, there is a button in the button program that will line up a MACD strategy at about the same time. And it's going to do so with mathematical logic for timing. Now, don't forget, it's automatic once you click on the button, so you don't have to sit there and wait for it. And you might be wondering, how can I be so sure that you can apply the button and the MACD strategies to your trading strategy? And my answer is, I know, because the market only does two things, and the market doesn't care what strategy you're using. It still only does two things. It works through trends and it works through ranges. So the MACD is set up to assist you with all of the things that happen in the midst of price action flowing from trends to ranges and back to trends again. So price patterns and trading strategies and techniques for charting price action are limitless. There's probably thousands of them. Here are a few that came to my mind. Okay. The combo trade patterns, of course, that's what I do. I've seen 5 flags, Elliott wave, Ichimoku clouds. I've seen rivers. I've seen Japanese candlesticks. I've seen harmonics, Gartley butterflies, Fibonacci strategies, parabolics. And of course, there's price patterns, which I also very much like. And they are endless and limitless and useful. And you can use a whole host of them: double bottoms, wedges, channels, flags, and pulls, double or triple tops, double or triple bottoms, head and shoulders, divergence, hidden divergence, and on and on. All strategies have some things in common: trade entry, momentum for the trade, hopefully, once it's opened, profit potential for the trader to take profit, and risk potential for the wiggle room the market needs while it's working through the pattern. These are the types of things that all strategies have in common, and these are the types of things that the MACD strategies and the MACD techniques that I've taught you in this series can help you with. All right, all traders need to deal with these types of tasks. Identify where you want to participate with the market. That's one of the elements of trade planning. Figure out where the market is going. Look for a target. That's one of the elements of trade planning. Identify your point of entry. That's always the hard part. And identify the amount of risk necessary for the trade to have a fighting chance to succeed. All traders have to deal with these tasks. That's how I know that the MACD strategies are applicable no matter what you trade or who you are. All right, so I'm going to give you a little rundown here. All traders have to deal with these problems, and the MACD has solutions. The problems are what to do when the market immediately moves against my trade right after I open it. The answer is MACD close will keep you steady or tell you to get out. What to do when my open trade starts racing against me and now I can see where it's probably going. Stop and reverse can ease that loss immediately. What to do when I want to open a trade but I'm not sure the market is ready to move? Well, that's where the hopper comes in, right? It can offer timing. It can offer information, valuable information about timing for that market move. Histogram bars are either building out momentum or telling you to wait. The reverse trigger finger leads the counter trend move with good probability. What strategies do you trade, and what goes wrong when you trade? What's the hard part for you? Chances are good the MACD is going to offer assistance to your trading practice no matter what you trade. That MACD is there to back you up, and it's free, and it's on your charts tonight. I'm not even selling the MACD. I wish I was the one that created it, but it wasn't me. I just love to use it because the MACD line tells you when the market is doing something right now. The histogram bars build from zero, demonstrating actual momentum. Fading histogram bars are not the same as momentum, and you won't be fooled about that again. The signal line actually gives context to the MACD line, so you know the difference between a move that's on and a move that just needs the passage of time. When the MACD crosses zero, whatever the market was previously doing, it's over. Don't forget that. All right, now I don't have screenshots of all your trading techniques, but here are a few that have come to mind. Of course, combo trade setups, Ichimoku clouds. My trading partner trades the clouds. Proprietary trading strategies are endless. There are 5-minute to weekly charts for analysis, and for trading there is Forex to futures to stocks, the MACD is the most reliable, in the moment, real-time indicator for timing, momentum, direction, and messages that the market needs the passage of time before it's ready to move. Have I convinced you that it's time to use the MACD yet? I hope so. All right, so this is the granddaddy review of the entire series that I shared with you at FX Street this month. And it'll just take a few minutes and we're just going to recap every single thing that we talked about. Are you ready? I'm ready. Here we go. So let's review the MACD. It's moving average, convergence, divergence. MACD's job is to watch for a change in the current market condition. Information we get from the MACD includes a hopper, which is good timing for a new trade. Histogram bars show momentum when it's building from the zero level. Reverse trigger finger shows you timing with momentum for a counter trend move. An overall direction in the market is noted based on MACD's position above or below the zero level. Take note when that changes. Here is an example. We had a hopper and it started a new move. The MACD made a move over zero. That is a hopper. It hopped down for a sell signal and it started out a nice long brand new move in the market. We had histogram bars. Every time we have histogram bars building from zero, they are pushing forth a wave of momentum in the market. And the MACD line, no matter where it is below zero, even if it's pointing up, even if it's moving up all the way really close to zero, as long as it's holding its position below zero, overall call on market direction is down. So that MACD line below zero held us in that downward direction for the duration of this downtrend. So let's review. The MACD line anywhere above zero demonstrates an up market. It doesn't matter if it's pointing down or if it's dropping down. Anywhere above zero demonstrates an up market. MACD line anywhere below zero demonstrates a down market. The MACD close is when the MACD line gets back to zero. Remember, whatever was previously happening in the market, it's over. Okay, sometimes it's a stop loss and sometimes it's a profit target, but it has a lot of meaning when the MACD gets back to zero, and it's telling you that whatever was previously happening, that is done, and now it's time to do something new. Here are some examples of that. As long as the MACD holds above zero, direction is up. So this is another really great example where the MACD line came all the way back down to zero, but it held its position above zero, even when price action got very spiky and very choppy. And if you were holding a long position in this instance, you know, it's reasonable to think we would have stopped out there. But it is also very noteworthy to see that the MACD didn't cross that line. It held that that up position as long as the bulls were in control of this market. So that is a demonstration of anywhere above zero, direction is up. So let's review. When the market move changes, for example, the market changes its course, has a reversal, does something new, starts something, the MACD is the first to get the message to you. Conversely, when price action is just choppy, right? Price action is just choppy. It looks like it's really starting to move, but it's actually just choppy. The MACD is generally unfazed by that. So it's very, very steadying in the market when the MACD holds its position, even when price doesn't. So you get definitive information to differentiate between the two. Is the market making a new move, or is the market just getting choppy right now and I should hold steady? One of my favorite things about the MACD, and here is a demonstration of that. In this instance, where we had a hopper going up, it was a signal to buy. I call this the inside range pattern when price is in between the two moving averages, and I like to buy it from the bottom to the top or sell it from the top to the bottom. Well, in this instance, I had a MACD hopper telling me it was a good time to buy, but as soon as you go long in this setup, we have a price bar that spiked all the way down below those moving averages and would have really made me uncomfortable and really made me question whether or not I should just take my loss or if I should stay on this trade. But when you look at the MACD, it never turned back for a second. It stayed really steady with those histogram bars pushing it in the upward direction and then the MACD eventually took the lead over those histogram bars. And there was never a question in my mind at that point in time that the MACD was holding me steady in that buy trade, even when price got jumpy. So now I learned to just expect that type of thing to happen. And it's extremely valuable to me to keep my head on straight when I start getting nervous because I see the market getting really jumpy. If the MACD is holding its position, so am I. All right, so let's continue our review. Measuring the average distance of a single price bar of how far it can go in the current market conditions on the current time frame chart gives you an idea of how far price can go without really meaning anything. This can be very useful when trying to plan a stop loss so that you know how far the market can move without really meaning anything. And also, it's very helpful for figuring out where you can take profit because you want to take what comes easy. And how far the measured profit target is going to tell you how far the market should be able to easily go. Remember, we're measuring the average distance of a single price bar from high to low, just the average, not the biggest bar on the chart, not the smallest bar on the chart, but what's an average distance this market can travel. And it gives us in current market conditions, in the current time frame, and it gives you some ideas about how much wiggle room your trade's going to need for a stop loss, and also where should your profit target be so that you're sure to get that low-hanging fruit and get yourself out of the exposure to risk and capture your profit quickly. All right, so let's review. A Monday trade is a hopper. It's a special hopper because it happens on a long time frame chart at the beginning of the week. If the MACD hops over zero on a Monday or a Tuesday on a long time frame chart, chances are good the market will hold its position long enough for us to capture 100 pips. It doesn't happen every week, but when it does, we love it. So let's review the button program. It's for MetaTrader 4. The button program is built for the MetaTrader 4 platform, and there are 11 MACD-based buttons, interactive buttons, that sit right on your charts, any of which you can and place on your charts for fast, convenient tools that will automate everyday trading tasks with a single click. And here are a few things that it can do for you. It can open a new hopper trade for you. That means that you can turn that button on and it will sit there and wait for the hopper to happen or not to happen, and you don't have to sit there and wait. It can close a trend trade with mathematical timing, so you can go to bed. Maybe a position in profit and the trend is going in your favor and you don't really want to close it too soon. You can let the button take over and keep an eye on it, and if the MACD crosses zero, it will close that trend trade for you at the right time. Closing an existing trade better than a stop loss when the MACD moves against you. So in this instance where the MACD holds you steady when price is getting choppy, but then there's other times when the MACD just rolls right back over zero and you know it's over, you know it's time to close your trade, no discussion, no questions. It's just really makes it a lot easier, and that can happen automatically for you with the use of the button program. Opening a counter trend trade with the benefit of MACD signaling momentum, not just sort of fading the move, but actual momentum for the counter trend direction with the reverse trigger finger. Opening a combo hopper trade and adding the expectation of momentum for price action. You can click to calculate that measured stop loss or that measured profit target and get that number. And then you can either automatically apply those orders or just use the number in some other way. Maybe it was just information you wanted. It does the math for you. You can set a stop loss and or a profit target to any number that you want. With a single click, you can change it 20 times if you want to. If you're like me, you might do that. You can stop and reverse to close on the losing direction and immediately reduce the loss. It's fast, it's super convenient, and you no longer sit there and watch the market race against you. You do something about it with a click. You can draw and label pivot points and also remove them with a single click and more. So that is a review of everything that we talked about in this series. So if you're tuning into this this session for the first time, or if you're watching the recorded video for the first time, please look for the other 6 lessons, because I put them all together in a specific way so that I could build out some ideas about how you can benefit from the messages that you get from the MACD, which is a freely available indicator that sits right on the bottom of your charts. The button program is currently on sale. You can find it at my website if you're interested at simplycombo.com/button-fall-sale. If you have questions, I'm happy to email you. You can find me at combotraders@gmail.com, and my website is simplycombo.com. That is the end of my webinar tonight. Thank you so much for joining me. I'm going to switch back over to the Google Hangouts where we can wrap it up. So thank you so much for joining me if you're here live. And I'm going to check and see if there were any questions tonight. And I don't see any questions. I know it's quite late. But thank you if you're catching this on the recording. And if you do have any questions, please don't hesitate to send me an email. I would love to hear from you. Thanks for joining me for the series, and thanks to FX Straight. I'll catch up with you all real soon. Bye, everybody.